I'd love to get your take on the market action we've seen over the last handful of sessions after imploding in January. Equities, in particular tech stocks, have made quite a comeback. What's changed over the last few days?
We feel the stars are starting to align for a rebound in US equities, and there's a couple of reasons for this. I think first, we've had a core view that we think yields across the curve, both in the US and Europe, are peaking and unlikely to move materially higher. And I think that's likely to obviously offer some solace for US equity markets. And I think the second reason really is positioning as well. We've started to see, a heavy capitulation in positioning, especially in the tech sector. That's working its way through. We're in the final innings of that. And certainly it still may be choppy in the next couple of sessions, but a lot of the hard work, at least in terms of the clear out in long positioning, has happened. So, as I said, the stars starting to align for a rebound.
Fascinating. So a lot comes down to positioning. Viraj, let's move on to central bank policy then. Clearly, this is right at the front of how investors are thinking about their portfolios moving forward. The big question is not whether central banks will raise interest rates, but how fast and how far will they go? On the Bank of England, what's your take?
Yeah, we're watching for three things tomorrow. I think first, exactly how fast will the pace of rate hikes be over 2022? Secondly, how far will they go? What is that terminal rate? Are they just going to stop at 1% like markets expect? Or will they go further, beyond 1.5%? That was the R-star estimates before the pandemic. So interesting to hear the bank's thoughts here. And then thirdly, really, what is the preference for quantitative tightening? I think we're going to get that messaging coming clearer tomorrow. Obviously, the bank will start to pause redemptions. That will naturally see the balance sheet run off to some extent, but what about active gilt sales as well? When will that come in, and to what extent will that replace rate hikes? So for us, we're positioned here for UK steepness for one reason only, is that we think these front-loaded hikes that the markets are pricing in are potentially going to get challenged on a couple of narratives in the UK, not least the quantitative tightening thinking. If the bank prefers to unwind its balance sheet to create dry powder for the next crisis, that's going to take out one or two hikes in our view, especially for 2022. So, positioning for that steepener view makes sense. And I think the bank will probably give that messaging off tomorrow, especially if they favor quantitative tightening over rate hikes.
And then, of course, got to ask you about the ECB, Viraj, because they're going to be competing for our attention tomorrow with overlapping conferences, more or less. How much, can I put it like this, spin do you think we're going to hear from the ECB in terms of not changing their positioning despite what we're seeing with inflation in Europe?
It's going to be a difficult challenge, but one that we've seen the ECB do before. I think, a lot of the market pricing of rate hikes and expectations being brought forward for ECB hikes are really a byproduct of what we're seeing in the Fed. So both positioning and price action suggests that the ECB, it's now consensus that the ECB may follow the Fed next, as we saw last week, in being a lot more hawkish and sounding the alarm over inflation. What we look at and some of the underlying metrics in Europe don't seem to be giving the same red hot inflation signals as they are maybe in the States. And I think that's one of the things that a lot of the doves on the governing council are also looking at. Until we get stronger wage dynamics, a more forceful recovery in the jobs market, both of which potentially are going to be much more protracted in Europe. I don't think anyone on the ECB wants to be sounding potential for hikes this year. So, I think the market again has got ahead of itself, especially the front-loaded nature of what's priced into the ECB curve. And I think tomorrow we might see some dovish pushback on that.